All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Been an interesting day in the market here today. A lot of chop, here through a range, and there's just the 1 minute chart of S&P futures, and the upside of this range here, 2764, downside 2736. A 28-point range here on the day where it's hit the high and the low. Well, come close to the high a couple times, but has hit the low multiple times. We saw this kind of springboard up on volume. Just as Fed Governor Bullard basically says the Fed needs to cut rates. I put a little more information about it in the message feed. And then, really, kind of right after that, Apple is having their conference, and Tim Cook is speaking, and the Department of Justice announces that the probe or their jurisdiction has been granted to them to go and take a look at Apple here as well, along with Google and whatnot there that we heard this morning. So very interesting timing and kind of one of those timings that just makes you go, that was, there's no reason that could not have been released this morning with Google, here on Apple. And so that was a very fishy timing. But regardless, we saw Apple fall on that, market come back to new low, and then, springboard back up, right? And during the whole time, we have Boeing talking, and Boeing having some positive things to say, and coming off of its lows and trying to push on higher. We have some of the stocks that have been beat up the most, holding in there today. But I think the most telling thing here today, take a look at FedEx. FedEx is down $1.50. Yep, it's down. But you know what? FedEx had every possible reason to sell off and sell off big this morning. It has not, and it's just one of those things where we're starting to see the sellers run out of some of these names where they're just not the intensity of the selling has waned. The intensity of the selling is almost shifting to more of an intensity of buying, where there's more volume on the rips than volume on the dip. Excuse me. And so, we are seeing a little bit of shift there. No real major confirmation of something dramatic. But anyway, that's some of the stuff we see happening. But, in all, it hasn't changed the market metrics all that much. The market vibe is at a -8. It's gone from a -10 to a -8. But that's meaningless. It doesn't give any kind of new indication there. It's one where if the market vibe were to move to -5 by tomorrow, that would trigger a bullish signal. But it's not there yet. You see the value of the U.S. dollar. It's been dropping steadily all day. And, if we pull up the minute chart here, I'll go back here to Thinkorswim. You can see the, pullback, right here through Buller's comments and, continued drop as, he's talking about rate cuts out of the Fed, which, let's face it, that's not new news, but to hear it from him, it's a little bit new here to the markets. Okay, so anyway, that's some of the stuff going on. You have U.S. President Trump basically calling for a boycott of AT&T, and AT&T stock rallies nicely. So it's just one of those where there are a lot of headlines, a lot of different news, a lot of noise out there. And we talked about it last week. That's not unusual. That's not uncommon, especially during this time of year. We either get this type of day where there's just a ton of news, or it's just one of those days where there's nothing and it's just dry bones out there, in the market. And today happens to be one of those kind of high level news days, and one where the metrics themselves aren't shifting all that much. So let's get to the challenge. Let's start with GLD. GLD here is trading at 124.98, which is above our profit level. Okay, 124.88. So we're above that. Now I talked a little bit about it this morning. This is one where to trim 40% off and move on, and to hold the rest. It just doesn't make a lot of sense. I would have two contracts left with a delta of one. That would mean that a $1 move in the GLD would equal $200 for the trade. It just from a profit standpoint doesn't make any sense to do. So just gonna back on out of the trade, move on, and go from there. So let's go make it happen, and create a closing order here. Let me look at the spread since we're in the money, 460 to 460 to 470. I'll see if they'll fill me at 465. I doubt it. Yeah, they're not going to fill me there. So I'll just reverse this here, cancel, replace order, and slap on a market order here. And out at 460. Yeah, so out at 460 here on a GLD. So that closes out the gold trade here. Not too bad. We entered for 202. Out here 2 days later for 460 for the contracts. We left the other three at 316 on Friday, so not too bad. Make sure the order goes out here. There we go. And that order is sent. Okay. All right. Yeah, there we go. So that puts the challenge up around 5,500 here. Let me just fill in the spreadsheet. Close date here is 6/3 p.m. session. Trade exit price. What we exit that for here? Sorry, short-term memory there. Yeah, 460. All right, 460. All right, so challenge just shy of 5,500. All right, and in all cash, right now. All right, so before I jumped on video, there was a signal here, and I'm just running it here just on the other screen to make sure it's still a signal. And the bullish signal here on Under Armour, and let me just make sure it still holds here. The price of the stock's about the same, so I'm pretty sure it has. Yeah, it has. So gonna go out and make an Under Armour trade here. All right. Let's just come in here to the options. This is one where, as I looked at the options on it, there are a lot of different ways we could go about this. From an option standpoint, the price of the stock's kind of in the middle of two strike prices here for July. So I'm gonna take a moderately conservative approach here. Just a little less, just moderately conservative. Gonna put about 1,800 here into it, per the challenge rules here, and just gonna do the 22.5s. Gonna go first strike in the money, instead of going first strike out of the money. Gonna go first strike in the money here and buy 10 contracts, and jump on in here to Under Armour. And in here at 184. And these are the July options here at 184. So let me make sure the alerts go out here. Trade type option, ticker symbol UAA. The price at 184 on 10 contracts. And this was the 19th of July, 2250 calls. All right. Let me just verify that. And boom, there we go. The alert is sent. All right. Let me come in here. We'll get it on the. We'll get it on here. 6/3 p.m. The entry date, and 19th of July. Right on the strike price here. Sorry, let me get the info back in front of me. So 19th of July, 2250 calls, right? And entry price here was $1.84 on 10 contracts. Now the stock price here on Under Armour is 23.48. 23.48, and we need the average true range here of 73. Right, so 22.48, average true range of 73. So that's going to give us a stock exit level here of 21.75, profit level of 23.94, and current stock price. Well, it would be nice if it were 124, but current stock price loading here. Wrong cell. There we go. And again, this current price, I mean, it's just the Google function, so it's not updated here. But auto exit date is 3 days from now. If the option's in the red, so on the 6th, so 6 p.m., auto exit date on the green. I think that bumps into next week. Yeah, it bumps into the 10th, so 6:10 in the p.m. session. Okay. All right, so that should put us in here. We'll get the cash in. There we go. So we're all filled out and rolling here. Okay. And I did not change this to correct that this morning. On the alert, it was sent out correctly as the July calls. But let's go and do that. There we go. All right. Now, Under Armour's an interesting stock here. You know me. I'm bullish Under Armour long term. We did a whole thing about it, about a year ago, and we've seen some pop and drop and chop and all of that here with Under Armour. But very interesting. Okay, daily chart signal. Okay, go run with it. Fine, that's what I'm doing. But take a look at the weekly chart here. We have this 24 level that it's been bumping up against for a long time. Over a year. We're now over a year bumping up against this level, the algorithm doesn't take that into account or anything like that. But I do find that very interesting. See it bumping up against this level, be a nice level to see break and really kind of push back into this 27-29 level here for Under Armour. But anyway. That's the weekly chart, but daily chart. We have the 3-7 crossover, and you can see the stochastics 39.1 well above 50 here. Bouncing off of this kind of 20-day moving average a little bit, but it's Under Armour. If you've never traded Under Armour, it can be kind of wild, here and there. But the way the stop kind of works with the average true range is kind of on today's low. Today's low is 22.71, and the stop is 21.75 here. Let me verify that. I have something incorrect here. Yeah, that's what I'm missing. 23 instead of 22 on the entry price. My apologies there. There we go. So, 22.75 is the stock exit price, and that's about today's low, right? 4 cents different. So pretty interesting to see it kind of play out that way. But I also don't think that's very coincidental when we look at how things are and what type of moves they have to trigger and everything else. It's, So, anyway, out of gold, into Under Armour. And moving on forward, we didn't see a trigger on Walmart. This was one that, could have been this morning very easily. But as I mentioned, the morning algorithm, it just has a higher standard. It just has to because of, whipsaw risk that is associated there. And so it was one where, had it been the afternoon, it would have triggered. But since it was morning, didn't. We're not seeing the 3-7 upside cross, hold up here throughout the day with Walmart. There's another interesting one, kind of trading near tops. And, all right, does it fade and flop, or, does it bust and break out? If it's going to bust and break out, I'm sure we'll get the 3-7 upside crossover and, be able to go out and play that here with Walmart. We still have plenty of cash here for the challenge. In fact, the cash value here with it is $3,600, so plenty of cash to put into play for the next trade. I probably should have done a few more contracts on Under Armour to get the exact 40% there, but yeah, we're a little light on contracts, I guess, with that. But gonna stick with the 10 and run from there. Okay. This morning I did bring up the ISM number. It had just been released when I got on video, and I wanted some time to be able to go and look through it and be able to kind of take a closer look at what's happening here with it. So let's go take a quick look here. When it comes to economic data, to me, this is the number. This is the most important number. It's not the most trend number in terms of, well, if this number is X, Y, and Z, then the market's going to do A, B, and C. But it is, in terms of just getting an overall feel for what's going on, to me it is the absolute best. And the headline number is low. It's 52.1, right? It's 52.1. The headline number, soft. Still growing, but at a slower pace, right? Which is what we see in all the data. It's growing, but at a slower pace. But when we really delve into the numbers here, it's actually a little bit better than what I expected to see when I saw that headline number. Take a look at the new orders. Number of new orders, or the new order element, ticked up. This is a leading indicator when it comes to what's going to happen and what's going to go on. That's not what you want to see from a bearish standpoint. If you're bullish, you go, okay, I wish that ticked up even more because that would feel a lot better. But new orders have ticked up. Production has fallen. We definitely saw new orders contract over the last little bit. So that kind of leads to a production pullback. We see that production pullback happening. The employment element has upticked. So we're not, this is one that's kind of volatile, but it has upticked. Supplier deliveries dropped pretty sizably, but so did inventories. And this is not a bearish thing, right? A drop in inventory is not a bearish thing for this number, even though it's calculated kind of that way here with it. I understand why they do, but I don't quite agree with it. Customer inventories actually picked up just a little bit, so we do see kind of that little bit of offset between the producer inventories and customer inventories. Prices, look at the price increase there. 3.2%. You may say, well, that's ooh, ouch, inflation. No, that's not a bad thing. That is something where you go, okay. To see prices increase generally says that there's a little bit of stress on things and a little more stress to produce more in the future. But, some of this is trade war driven, right? A very interesting number to keep an eye on. And one that I look at as a very positive number in terms of future production. Backlog of orders fell dramatically, here in May. Big drop in backlog of orders. What is that? That's firms just saying, hey, you know what? We're going to hold off. We're going to see how things play out for a little while. Right, which is a natural response to what we've seen happen out there in the world, and one that I would expect to see, and we see it in a big way here in the ISM, and this is the biggest change number there. New export orders actually rose. Imports fell just a little bit. So, not a lot of trade war evidence in the data here just yet. A few areas where we go, yeah, okay, we can see it, but it's a fairly positive number for being so low, right? I mean, this is the lowest number that we have here on the board, right? April was 52.8. We've now fallen to 52.1 here in May. It's a new 12-month low. It's an uglier number, but I think we could argue it's a better number than maybe this 54.2 or even 55.3 that we saw here in March, and definitely better than the 52.8 we saw last April. But is it going to be something that the market seizes on and buys up? No, it's not. But it is one where I would not be surprised if May is a trough. In terms of the PMI data, given what we saw with new orders. So, we'll see how it plays out overall. How do you apply this trade-wise? I don't think there's a huge application other than to kind of keep and say, hey, you know what? I need to be able to react to bullish and bearish signals, right? Need to be able to understand that there's going to be flows in both directions, which we already knew, right? That's not a new story. That's not a anything that's changing. That's kind of just confirmation of that element here. Okay. So that's the ISM data that we saw here this morning. We have more economic data on tap here this week. We're going to have more Fed speak this week. I'm sure we're going to have more trade work talk this week. We're just going to continue to have it, right? We're going to continue to have a lot of it, and you can see we're going to get into the ADP employment number on Wednesday, PMI services, non-manufacturing. We're going to have a lot of data out of Europe, especially producer price index, which I think is important. But leading up to the U.S. here on Friday with the jobs report. So a lot of data for the markets to absorb here this week, along with the growing swirls of trade war, trade talk. The Apple Developer Conference, Boeing Conference. There's just, the Fed speak. There's a lot for the markets to digest, and I don't think the chop is over. I think we're going to see, a lot more of that. You can see tomorrow we have 1, 2, 3, 4, 5, 6 Fed governors speaking. I mean, 6 of them speaking. And, then Wednesday, 1, 2, 3, 4. I mean, 10 in the next 2 days. And, we already saw what Bullard did to the market here today. So there's just a lot. And it's going to be one where if you're trying to take every piece of data and go, well, what should I do about my trade based on this, that, and that, and this, it's going to be a little bit of maddening. And it's going to be, maybe a lot of bit of maddening. So, just make sure. Risk-reward exposure, right? That's what you can control. Sure, we understand different things can happen out there in the market. And, I did laugh at one market strategist today, called U.S. President Trump unpredictable in terms of being able to forecast his strategy, which I kind of found I got a little chuckle out of there. But, we're just going to see a lot of that still. And, you run with your chart, you run with the risk you're comfortable with, the exposure you're comfortable with, and trust what you see and run there with it. Thanks for hopping on. Have yourselves a great evening, and we'll talk to you tomorrow. Take care.